Hello, everybody, and welcome back to the Cyclical Investors Club YouTube channel. This video is going to be an update on my Pfizer buy price, or the price that I'm looking to buy Pfizer stock after their recent announcement that earnings were going to come in, expected to come in significantly lower this year for the full year than they initially forecast. So the news is just to recap, I'm gonna post a link of this on my last Pfizer video, which was just like a couple weeks ago or a week ago. Um, that video, at that point, I was looking around $30 a share to potentially buy the stock. Right now, it's at 32, and it's falling after hours on this Friday. I'm putting this out on the weekend on Saturday. I'm kind of glad they announced this on Friday, so I had time to kind of look at it and think about it a little bit, um, and was able to just sort of come up with an adjustment for the announcement. So let's quickly take a look at what they're. This is over on Seeking Alpha's news wire stream here. So I think the key for us is, since I'm using earnings for a lot of this, is going to be they were expecting $3. I think the average was 3.30 a share for the full year 23 adjusted EPS. Now they're looking at only like a dollar. We'll call it $1.55 if you take the mean there. Um, that's a big difference, right? So basically, it looks like what's happened, just from me kind of skimming through it, is they aren't going to make as much money from COVID vaccines as they were expecting. Maybe even they probably have some costs associated with that. I didn't dig into it. I just am taking their word for what they're saying they're going to do now. So, as I talked about in the last video, we already knew that this bust from the COVID boom was going to happen. We could already see it happening. The question was, where was this going to land? So we had adjusted earnings right now at 330, which is going down to 155, which is a huge drop. Um, Not entirely unexpected. I mean, when you have these booms and busts, they can definitely overshoot to the downside. And obviously, like, even they didn't really know how it was gonna pan out. Or else they, would have put out guidance that was somewhat closer to what reality was going to be. So nobody ever really knows for sure, and that's why you want to be a little bit cautious. So I didn't have any like limit orders in at $30 or whatever. I'm just kind of sitting and watching. That gives you a little bit of wiggle room. Usually I only put like a limit order in if I'm going on vacation and something is like really close to like a buy price and I'm going to be traveling or something and not be close to my computer. Um so we basically know this is going to come down and at least hit my buy price. I don't know how the market's actually going to react to this. I know it's not going to be positively, but I don't know how negatively, because I would say we know what earnings were pre-COVID at 295. I actually estimated these when I did my last analysis at 287. I think that was their basic earnings without any adjustments. So I was already a little more conservative. That was good because those are going to be off by a dollar. But we do know that if most of this is due to COVID, next year they should bounce back somewhat. We don't know how much they're going to bounce back, and we also don't know if this year will be the total end of it, in terms of the bust. But we know over time, the bust is only going to happen. They're only going to overproduce COVID vaccines or expect more from them like once, right? It's probably not going to be an ongoing mistake. So, as an investor, what you're kind of hoping for here is the market overreacts and you can get a little bit lower price than you might otherwise be able to get. Okay, so I do suggest people go watch the other video because I'm not going to make like a full explanation video, and I'll put a link for that in the description. Um, I'm just going to adjust some of the assumptions that I was making and kind of show you a couple things here, and so we can get a new buy price because it's going to be lower now that we know the market's we know it's going to come in lower, and we know the market is probably going to be is going to punish the stock a little bit more. So one thing I did do is I adjusted the earnings, the new earnings, to this 155 level, which were 287 before. And when I did that, and I ran my 10-year CAGR estimate, um, owner's earnings estimate, it came in at 5.11%. So what I find interesting about this is that's pretty much right in line where the market is, like the wider S&P 500. Um, on average, the S&P 500 right now is, when I do forward forecasts, it's like between 5% and 5.5%. If I keep the weightings in there for the mega cap stocks and everything. So straight up, like S&P 500 index, forward looking returns, if things are similar as they've been in the past since like 2015, and using my adjustments and all that stuff, like 5 to 5.5. So before, Pfizer looked like a pretty, it looked like it was a little bit better value. I want to say fair. Well, let's just see. I can actually type. Let's do 287 and see what would. Yeah, so this would be a buy, right? So this is a big difference. So above 8% would have been a buy. Um, but I was expecting a recession, and so that's why I had a lower buy price, and we didn't buy at this level. But we knew we were getting close. It looked like a pretty good value. So what's really interesting to me here is this is one where it looked like a good value, but Wall Street was really right. They basically knew this was coming. Somebody knew it was coming, or all the people with money knew it was coming, which is kind of interesting in itself because they had already priced into the stock. They were already pricing it just like the rest of the market. So this was priced into the stock, which is why it looked cheap. Um, but it hadn't been announced by Pfizer yet. So that's one way to kind of think about it. So you have to be careful when things look like super duper cheap. Usually there's a reason. Now I think the question is, the market was pricing this in, but is it pricing in like a relatively quick recovery to some degree? And I would say it's not. So it's looking a little at least interesting here, um, because the negativity was definitely priced in. So for me, I have this kind of recession buy price. This was like $30 and something cents on my last video, and it's probably going to fall below that on Monday. Now I don't know how far it's going to be fall below, um, but I'm not in a big hurry to like jump in front of like a falling knife. So when I was thinking about this, I thought, well, the market knows that this is, they should know this is kind of probably worst year scenario, and next year should be better. Um, so my instinct is that market probably isn't going to get too carried away to the downside, but you never really know. So I wouldn't be putting limit orders in or anything at this price, but this is kind of what I'm looking at. And so the only adjustment that I made, because I had already made adjustments for like a bust, but there's not a historical precedent, so I was just using kind of past recessions as a rough guide to kind of get us in a spot that would be a decent price, right? So the way that I do that is I take a pretty pessimistic recession PE estimate, basically, and then I say, okay, how close do I want to get to the peak pessimism? And for most of these, it's within like 40% of that. So that's what I had done. So as an example, if the PE during the last recession, I actually blended to the last two recessions for this one, but if it was 10, then I would want to get within like a 14 recession PE before I would buy it. I wouldn't necessarily aim for like the worst. I just want to kind of get close. So I'm not paying too much, and then the potential upside is better. But you also have to calculate in what are the odds of it actually falling that low. So it is just, it's an art more than a science, but it's also just getting a reasonable price that makes sense, that the best price you think you can get that has a reasonable chance of actually hitting. So what I did is, so that was 40% I wanted to get within with. I changed it to 20%. So the equivalent would be if the recession PE had been 10, instead of buying it when it gets to like a 14 recession PE this time around, we would want to aim for a 12. In reality, this is actually 8.1. the recession PE that I'm using here was a blend of 2020 and 2008, which was 6.75. So this was a 40%, getting within 40% of that. And now it's getting within 20%. If the news gets worse, I would take this down to just even. I would take that 20% buffer out. So we could still lower it some more, just depending on, what happens, how everything else is doing, how negative the market's being. So we still have room to lower it a little bit more. Right now that this is at 26.21. Just again, I'm just kind of estimating um, the best that I can based on kind of what we know from history. And when I looked back, I that was my initial kind of I took it out completely, and then I was like, okay, well, do we need to really be that negative? We kind of know things are probably going to bounce back next year. Um, I looked, and like the low in March 2020 was 26.41, which was right here, and that seemed like a pretty reasonable spot to buy it, even just getting rid of all the COVID stuff. So I think buying there would at least get you in a pretty good spot as long as you're willing to wait a few years and kind of see what happens. So that's the adjustment that I made right now. That brings it about 18% lower than it is right now. Kind of felt like the kitchen sinked it a little bit in this with this announcement. So hopefully we'll get down to like $26 and we'll pick up some, and then that'll kind of be the worst news, and we can just hold it and see what happens after that. But this 26.21, really kind of under $27 a share, is probably a pretty decent spot to take a chance, provided actual news and earnings don't end up worse than that. So that's where I'm at right now. That's the update, and if we get more news, I guess I'll make another video or I update it again. Usually you don't get announcements this bad, honestly. Um, that was it. It was a lot worse, I think, than anybody was like expecting. So I'm glad we didn't end up buying it yet. And hopefully, if you watched the first video, you made sure to click this link. I'll pin it in the comments, and you can see where the new buy price is. And again, I wouldn't be like super quick on the trigger to buy. Let it come down, take a look at it, see if anything worse has happened. Think about it, and then we'll see if we want to bring it down again. If we do end up bringing it down again, I can actually tell you what that will be. So if I just go to flat out, no cushion, we're looking at 21.84. So that's kind of where it's at right now, and I think we'll just monitor it. If it drops like 20% on Monday, I'll probably buy. Yeah, I mean, I'm not going to buy ahead of time, but if we get a giant reaction, I think that's probably a good time to pick. I don't know what's going to happen. I think it was down 3% after hours. I wouldn't be surprised if we see a 20% drop, but if we do, I'd probably buy it on Monday. So 1% waiting, take small positions. If you like to take bigger positions, this is definitely one I wouldn't go all in at once on. Just kind of ease into it anywhere around we get down to like mid 20s. All right, guys. Thanks for watching. I'll have links in the bottom to my full investing service, to Patreon, to all that stuff. So if you want to check me out there, you can do that, and I'll keep posting updates on this. And if who knows, maybe we'll buy it, and then I'll have another update on buying it. So I'll see everybody later. Bye.